All right, talking about below market loans and imputed interest, kind of gave a little prelude to this earlier. However, this is going to deal with deterring parties from providing loans with below market interest rates that may be attractive to related parties. And this is kind of more for fairness, making sure that everyone's properly reporting interest income. If this does apply, the loan is going to be restructured. So just think parents giving a child a loan and it's a very low interest rate below the applicable federal rate. It's going to be restructured by the IRS at an arm's length transaction where the lender offers a loan to the borrower with a note requiring interest payment at the AFR, which the IRS regularly publishes. You're not going to need to memorize any of the AFR or even need to know that. When individuals grant below market loans, they generally need to report any uncharged interest as interest income, and borrowers might be able to deduct the uncharged interest except when it is personal interest. Kind of think of it like normal transactions. If you have interest income, you have to report that as income and get taxed on it. If you have interest expense, you can deduct it. So trying to make it like normal rules. Diving into imputed interest rules and the loans they affect, the below market loan provisions pertain to these loans. These are just examples of loans that would get slammed by these rules. Gift loans, any below market loan categorized as a gift loan. Hey, what do you want for your birthday? Oh, I want a loan of $1 million for a 0.0005% interest rate. That's a pretty nice gift. Compensation related loans, any below market loan directly or indirectly between an employer and employee, or an independent contractor and their client. That could be something we'd see as well. Corporation shareholder loans, any below market loan directly or indirectly between a corporation and any of its shareholders. Now, just to reiterate, these are not disallowed loans. You can do whatever you want. It's just you'll face the consequences of having to possibly restructure it, pay extra interest on it. So that's just what we're dealing with here. Tax avoidance loans, any below market loan primarily intended to avoid federal tax through interest arrangements. I mean, maybe you'll get, if you're trying to manipulate the tax liability, you might get a penalty for that. Other below market loans, any below market loan not mentioned above that significantly impacts the federal tax liability of the lender or the borrower as specified. And lastly, loans to qualified continuing care facilities, any loan made to any facility under a continuing care contract. Say these ones are probably more important there. Just examples to kind of get you familiar with what we're dealing with. Now we've got a de minimis exception. There are exceptions to the imputed interest rules for specific situations because it would be impossible to enforce this all the time. So what are we talking about here? Well, gift loans between individuals. For gift loans directly between individuals, the imputed interest rules do not apply on any day when the outstanding amount of the loans between those individuals is $10,000 or less, right? Or is the government going to try to track down everyone who loans each other $10 for lunch? That would be a little aggressive. Compensation related and corporate shareholder loans. Now these rules do not apply on any day. Similarly, when the amount is $10,000 or less that are compensated related or corporate shareholder loans. So again, just it doesn't apply in these certain situations. And special rules for gift loans not exceeding $100,000. Now, in the case of gift loans between individuals, where the outstanding loans between the lender and borrower total $100,000 or less, the uncharged interest, so maybe you're charging them 1% and the federal rate is 5%, so that 4% interest to be included in the lender's income and deductible by the borrower is limited to the borrower's net investment income for the year. If the borrower's net investment income is $1,000 or less, the uncharged interest is treated as zero. This is not that I wouldn't worry about doing this mathematically or anything, just kind of knowing a couple of these rules where this does not apply. Here are some examples, kind of generally, right, of what we're dealing with here. John lends his cousin Sarah $150,000 for a period of 5 years with an annual interest rate of 0.5%. However, the AFR for this type of loan is 1.75%. So the IRS swoops in, says, okay, you're going to have to rework this. Determine if the loan qualifies as a below market loan, and if so, calculate the imputed interest income to John. Now, this loan does seem to be a gift loan between individuals as the interest rate is below the market rate, and this will apply, and we will have an imputed interest charge. What are we going to do here? Well, we know this is above the de minimis and threshold amounts, or it's above that. Imputed interest we calculated as the following. We've got the interest required under the AFR, which is the 1.75% times 150. The actual interest that was charged, that comes out to $750, and the imputed interest is the difference between those two amounts. Nothing too crazy, nothing too wild, nothing you can't handle. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.